Our next story is about Bitcoin. It is surging, and how? Yesterday, it hit a new record. One Bitcoin was priced at $69,000. This was an all-time high for Bitcoin. Bitcoin sustained this price level only briefly, but the milestone is not our story. It's the momentum. It's been steady for a while. The question is, what is driving this rally? Usually, this kind of surge happens due to heavy buying when a large number of investors start investing in a particular asset and they do it in large quantities, or when wealthy investors start pouring in big money. And the case of Bitcoin is no different. It's going up because of an influx of large investments, which brings us to the question, who is buying Bitcoin? Big investors in the United States. Investment firms have been at it for a while now. They've been trying to bring Bitcoin-related products. In January, they got a green light from the American regulators. A group of firms got the nod. They were allowed to introduce a new class of investments. These are called ETFs, Exchange Traded Funds, ETF. Now, these funds work like mutual funds. Expert fund managers run them. They collect money from investors and invest them directly into financial assets like stocks, or in this case, Bitcoin. If you're an investor, you can buy into these funds, ETFs, with small amounts of money, meaning you can indirectly own Bitcoin, also a number of other digital currencies. You can own them through this fund, ETF. So now big names have entered the Bitcoin game, the likes of BlackRock, Fidelity, and Grayscale. Reports say they have bought hundreds of thousands of Bitcoins, and that's what's causing this price surge.
I think this is classic supply and demand. Demand is booming. We had the spot Bitcoin ETF approved in the US just over 6 weeks ago. And since then, those ETFs have accumulated 4% of all the Bitcoin there is in the world just in 6 weeks. Just to put that in perspective, that's proportionally about twice the size of the gold ETFs, which have been out there for a lot longer.
Now, what does that mean for people like us? The average investor, what does it mean for them? Early adopters of Bitcoin will celebrate. Their investments have grown many-fold, and they've earned some well-deserved bragging rights too. There is institutional investment in Bitcoin now. Mainstream players are entering this space. Notable players are buying Bitcoin, and that amounts to acceptance. That means that Bitcoin and other digital currencies are here to stay. But I must say, these investments are not for the faint-hearted. Digital currencies like Bitcoin can be volatile assets. Look at the trajectory. Bitcoin emerged in 2009. It wanted to be the currency for the internet, one that is not controlled by any bank, by any central or reserve bank, by any country, government, or institution. It was not supposed to be controlled. Its operations are decentralized. Now, Bitcoin is built on the principle of blockchain. It's like a huge public ledger where every Bitcoin transaction is recorded. Everyone using the Bitcoin can see that transaction. So it makes any kind of cheating quite hard. When someone transacts using Bitcoin, computers around the world verify and authenticate it. So transactions cannot be fabricated. Now, since then, since 2009, many more cryptocurrencies like Bitcoin have emerged. They're called cryptocurrencies. But there is a fundamental problem with them. There is no underlying asset, no asset that decides the price of these currencies. There are no gold bars which back our traditional currencies. So this market, the cryptocurrency market, runs on a pure demand and supply model. When there is more demand, the price goes up. When the demand shrinks, the price falls. And it falls quite dramatically. Consider what happened in July 2022. Bitcoin's price dropped below $20,000. The global outlook was gloomy. There were fears of a recession, so investors turned towards safer assets. And just see how wild the fluctuation has been. In July 2022, one Bitcoin was worth $19,000. Today, the price is well over $60,000. That's a jump of more than 3 times in less than 2 years. It could fall again when the markets turn bearish. So if you're thinking about investing, do remember this. This is no quick money scheme. Think your investment through, consult an expert, and exercise caution.